What's up, everybody? Welcome to Tesla Fix. Today we have also a very special episode, like I always introduce. But we had the shareholder meeting recently, and of course, there was this very special person that I really like to interview now, and that's Alexandra Merz. She's here with us today, and yeah, we're going to talk, of course, about the shareholder meeting. That's why I needed a financial expert here. You worked a long time for Moody's and also for Deutsche Bank in France, in England, in Germany. So very much experience here sitting next to me, like right above or around the pond or over the pond, how you say. So yeah, Alexandra, I'm very glad you're here. And maybe you want to tell us something about you, what you're working on maybe right now, and then we start the episode.
Sure. So I try to always have a governance angle on Tesla, looking at things that other people really don't want to look at. But it's also because I have no clue about cars, right? I don't have no clue about raw materials and cars. So you just do what you know what you're doing. So for about a year now, I've been on the back of the rating agencies. I think we've made good progress on that side.
Yeah, you really did.
Right? And so at the moment, I was just focusing on the board of directors. Remember all these people screaming at the beginning of the years that the board of directors not doing their jobs and whatever, and they were doing their
jobs. Ross Gerber, I have to mention him there. Yeah.
But not only. I think the
not
biggest
only, of
one
course.
was Leo Kogan, right? I mean, he was.
Yeah, that's true.
And I mean, obviously, we have no clue how he voted, but I have the feeling when I see these voting results from last week that we can probably point in a certain direction. So anyway, so yes, I'm trying to look at things from a governance perspective. Last night, I did a little chart on the results of those shareholder votes on the board members. So I'm trying to focus on these things. They're boring. I understand they're boring, but they're actually very important just for the sake of Tesla. So I try to package it in a digestible way and make sure that people get access to that information in the quickest to grab and easiest manner.
Okay, yeah, that's pretty good. I try to get it up here because I think it's very interesting. I haven't looked into it. So
I think when I did it last night, it was late. I was tired, and then I thought, do it because maybe Jan can use it. And here we are.
Yeah, okay. I'm gonna we're gonna watch now the clip from the shareholder meeting. I think then we're gonna go back to your chart because then I have some time to get it up. Yeah, because you had the opportunity finally. I was like, it was like the Super Bowl. I was sitting there and that's Alexandra. Yes, she made it. Yeah, and it was very funny to see everybody. Also, the questions were pretty great. Also, of course, the advertising question of what's his name? Meet Kevin, of course. Yeah, and this was very important to hear now. I'm also a proponent for advertising because I'm from advertising. So that's why I see the need, especially when you want to reach, of course, like 20 million sales. Then you have to prepare it beforehand. You have to build brand as well for the masses. And that's why I think, you have to start early to do that. That's a process that takes years.
Build awareness, of course.
Yeah, and people don't buy cars like, oh, today I'm gonna go to Burger King and afterwards I'm gonna buy a car. No, that's not how it works. You really plan and everything. So yeah, this was very interesting. But your question was also pretty interesting. So let's take a listen. I hope this. I know it's difficult to hear yourself talk. Right? Okay, let's go.
Sure. Thank you, Elon. Alexandra Merz. I am Tesla Boomer Mama. Very happy to be here. All right. So very grateful to the Tesla team and you, of course. Just want you to know we love the emotions every day, joy and less joy, but we're there. Shareholders, it's not easy. We're here not because it's easy, but because it's hard. So my question initially was on in-house financing. You already answered that, and I want to congratulate you to the double investment grade rating. But then I asked my Twitter subscribers, I'm sure you're going to appreciate, what they wanted to bring forward. Sure. And that question made the cut. Here we go. Automotive, including SAS, peak margin, the same for energy. What number and by when do you have the best Elon guess that we get there?
Sorry, I'm not sure I fully understand the question.
So this is the peak margin for automobile,
Oh, yeah.
including SAS and energy. And by when will we get there? Your guess. I know nobody will sue you.
Sorry, what's SAS?
Well, software as a service.
Oh, okay. You mean self-driving?
FSD,
Yeah.
what's going to be the top automobile margin?
Yeah. I mean, what I was saying earlier is that at the point at which you have a truly autonomous vehicle that can drive around with no one in it, the utility of the vehicle, I think, as a rough guess, is probably 5 times what it is today, because people will drive an average of an hour and a half a day, perhaps, so 10 hours a week. But if the car is autonomous, it can probably, just speculation, but it probably can operate for a third of the hours in the week, which would mean 50 or more hours, thus a 5-fold increase. But the car costs the same.
Sure, I understand, but what is going to be the margin for Tesla then? Because you're obviously thinking you're going to sell much more FSD then, right? You may have a system in place of robotaxis. You may have a cut with fleets. So did you do any projections what the automotive peak margin for Tesla could be in 2 years, 5 years, and the same for energy?
Well, I mean, this is definitely, we're in sort of highly speculative territory here. But obviously, if you've got a car that costs the same and has, say, I don't know, a 20 or 25% margin, and suddenly is able to be used 5 times as much, then you might have 80% margins, and the revenue would increase several-fold. That's why I say it's probably going to be the biggest asset value step change in history of Earth. And energy does not have simply does not have such an increase in asset utilization. So I would expect energy to remain at sort of a 25%-ish to 30% margin.
So yeah, so
Still
long
love
clip,
it.
I know, and I really liked how at first he didn't know what what you meant, but then he catched on, and I mean 80% margin is a bold number. I already could see the headlines. Tesla, like the Tesla bulls eating it up right away. So yeah, we have to take it a little bit with a grain of salt, of course, because it was like not. Nobody calculated anything there. It was just a rough estimate, but still, yeah, amazing what he said, of course, and yeah. So maybe you want to talk about this.
Yeah, I do, because obviously, I mean, again, I'm still under the emotion. I can still not see this and just, detach myself and think, my gosh, how did you have the courage to go up there? And then it's one thing to ask the first question, but I mean, I obviously engaged with him, and it's one of those moments where you see yourself doing that, but you're not really there, right? It's a very strange, it's a very strange feeling. But I'm very pleased about it. I mean, obviously you always, I don't know you, but I'm always very critical with myself. So I'm like, okay,
Me too,
9 out
of
of
course.
10. Aren't we all trying to be perfectionist? But 9 out of 10 I give myself, which is a high rate for me, because I usually am not that convinced about myself. So I think I did as well as I had hoped I would. I was prepared for that question, and I really wanted to get actually a couple of things out of him. And I mean, I would have loved even more details, but I mean, how much can you ask? How much can you ask? But like, I would like to know, when do we get to 80%, or when do we get to the energy margin? But I think I'm where I want to be. So the second thing is, since 2018, we didn't hear much about margin, right? 2018 was, remember, getting out of production hell, financial analysts being very much against Tesla, questioning everything. And Elon at that period was putting similar numbers out there. But then for the last 5 years, it sort of drifted away. Now, I only got into Tesla in 2020, but I did lots of backwards looking research and looked at lots of old shareholder meetings and things like that to catch up, because I was late. But who else does that, right? You have to be a real Tesla nut to do that. So I found, when I choose this question to ask, I wanted to obviously get a number out of him, but also bring on board all those that joined Tesla the last couple of years that were not in the 2018 period in there, and hear it from the horse's mouth. So because it's one thing that we have a couple of YouTubers out there with extravagant price predictions and whatever, who all obviously are basing this on FSD. We obviously have ARK Invest as well. I'm quite critical of the ARK Invest model, but they have the merit to have obviously FSD and Robotaxi as a model in there. So I found it was important to get Elon talk about it. He actually moderated it a little bit half an hour later when he was on the CNBC interview with Faber. He put the number down to 70. So I have the little suspicion that somebody from the board must have called him and told him, look, how about we put those 70% down, those 80% down to 70? But anyway, so let me get to why I asked this and what I wanted to get out of it. So my main reason obviously was to get a number out there at a moment where he had a big audience, had the live stream, had TV on him, so that we're talking margins again. Also, I want to wake up everybody to update their models, because there are numbers out there in all senses, and I want to get to that. Let's go with the easy part first. Energy. We've had for the last 6 months people screaming that there would be a 50% energy margin and building models on that. I do believe energy will be a huge contributor to Tesla, but I would love to keep it real at around 25% of a profit margin, just because by the volume itself, it will be huge numbers, and we just shouldn't become too greedy or too and then create disappointment, right? So I absolutely love that. Just in a very nonchalant manner, he just threw out there, okay, energy 20-25%, maybe peaking out at 30. Okay, because my question was the peak margin. That didn't mean what's now, whatever, what's the peak, and then maybe we're going to settle somewhere, a little bit lower. So I love that. That puts to rest the 50%. And I mean, since then, a week has passed, and I don't see any of those energy crazies anymore out there with 50%. So I think that's mission accomplished. So I think everybody is now settling around 25, maybe 30%. Energy, good. And then on the car side, the question really is, what did he mean with those 80%? Now, there were not only 80% mentioned, there was also mentioned that he expects the hardware of the car to be long-term between 20 and 25%, which is great, which is a number that has been out there, but he reiterated that one, and I think that's good. We're currently at 18%. As you know, we had a tough quarter. We may even get down to 17 now in Q2. I think Q2 is still going to be a bit choppy, just because there's just so much going on, and inventory building up and all these things. So there is a little risk still to the downside, but he sees medium to long term a stable 20 to 25% margin on the hardware of the car. Now, how do we get from 25% to 80%? That is the big question, right? And so I've been playing around with number, and I haven't come up with anything I'm going to publish yet, but it's not that easy, right? Because if you think that each car, let's just take a number. Let's say a car costs on average $50,000. I mean, I know we'll have cheaper ones, but we also have some more expensive ones. And you have a 20%, 25% margin on the hardware. Where would you get all these other 50% from? So it can only be software, right? And then Elon actually stated in the interview with Faber on CNBC half an hour later that they are projecting a profit share 50-50 between Tesla, the company, and the car owner, right? So how much more do you need to add? And obviously it doesn't add all in one block. It adds a little bit every month. So let's say a car is 5 years old and has for 5 years been running FSD. In year 5, it only has 12 months to make a profit margin that contributes to the Tesla balance sheet, right? Because it's only for that 12 months that you contribute to the financial results. But you have other cars that are now 4 years old, 3 years old, 2 years, 1 year. So everybody contributes to this single year. So I've been modeling. I'm not at the end of it, but it's really, you have to really have two assumptions. And one he was hammering home, and he's completely right, is the car will have a much bigger utility. It's not going to just sit in your driveway and sleep. It's going to do things. And during this time that it is doing things that you as the owner don't use it, it is earning income for the owner and for Tesla. So obviously income from Tesla will come through either because they sold at $15,000. I think that's actually going to end soon. I think you can soon not purchase FSD on a fixed price anymore. Or you pay the 200 or maybe higher rates. And there may actually be a system in place that more you use it, higher you pay a fixed fee initially to access it on a monthly basis. You can probably have it just by the day if somebody doesn't want to rent the car out and just goes on a day trip and wants it that specific day. And yes, the single day will cost a lot, but obviously much less than paying it for the whole month. So anyway, there will be, in my view, a quite modular system on the fixed price to have FSD on your car. And then there will obviously be the ride sharing. So if Tesla is right that a certain number of the cars is constantly out there making money for the owner and for Tesla, you actually get quite quickly to the 80% and even beyond, just because you have this additional utility. And then the third point is, what will happen when Tesla doesn't sell the cars anymore, when it's actually a Tesla fleet out there, which was part of my question, right? When Tesla produce, and Tesla will produce, said there are 2 new models on top of the 25,000 on the current platforms that are coming out that have a TAM of 5 million cars. What if those cars are not sold, but 100% running for Tesla? And there you get to much above 100% margins. So I'm still playing around with my tool. I can see how you can get to 80%. It's obviously nothing comparable to any business case for cars today. So you need a lot of imagination for it. But I'm pleased I woke up the beast again, and we're talking about it. There are a couple of other analysts that are working and sending me messages and say, how do you do this? How would you model that and that? So we're all sort of putting our brain power together, and I mean it's absolutely fabulous, because yes, in 2018 these numbers were out, but 5 years later we're still not there. Now we're actually getting very close to it, right? I have the feeling that in 2-3 years we may be there. And so you have at the same time this energy giant, and at the same time now the software as a service money that will start pouring in, and it's just going to be fabulous. Looking forward.
Yeah, it sounds pretty good then.
Yeah.
Interesting for the lengthy explanation, because I think it's very important to go into detail in those kind of topics, because of course, like this sounds very great. You have 80% margin. Oh, this sounds awesome. And people who are also not in the financial space maybe have difficulty to categorize this. And for me as well, I'm not a financial specialist, so this is, for me, my monkey brain just says, "Oh, Tesla good," and that's it, more or less. And
and
course,
it's actually. I agree with you, and it's actually I was very pleased. I came back from Austin on the Wednesday night, very late. The delays, I mean, American flights. That's another subject. But Thursday morning, I saw my youngest son, who is it's actually today having his 20th birthday, and he said to me, "Mom, he can't get there if he sells a car $50,000, so that's $50,000 in revenue. To do 80%, he has to make $40,000 on the car. So fair enough. The cost of good is so and so much, whatever. How we'll get to 40,000?" And I love that. I love the idea that people suddenly, and I'm including my kid, thinking about how could you get there? Where does the money come from? Okay, so it's not just the 15,000 from FSD. Okay, it's not just the $200 per month monthly fee. Oh, it's also the ride share. So how many miles do you have to do? How much do you have to? So we were going through different scenarios. 20 cents the mile, 50 cents the mile. How much does the mile have to cost? How much does it cost compared to an Uber today? Is your utility higher than the Uber today? What happens at state borders in the United States? Because obviously it will roll out in the United States probably first. So what happens when you leave California? Will you be able to continue ride sharing in Nevada? What happens to taxes? Is there a tax on the service? We're starting to spin our way through, and there's so many questions that are absolutely exciting.
Yeah, but I think it's interesting, like those topics more and more also pour to the normal people, like the average people. And it's interesting that, I mean, there was never a, let's call it, car maker in the world that got so much attention. I think also in the communities of the supporters, because in different German brands, for example, they have a huge following in the engineering space. For example, they are like very interested in this. But we have financial analysts are interested in Tesla. It's like it's a unicorn, of course, so that's why there's so much attention on it. And maybe we can dive in a little bit into the PE ratio, because I think this is so interesting. Because you talked about FSD, and FSD obviously is also artificial intelligence technology. So this stuff is rated very high from analysts, actually. But some analysts still look at Tesla as just as a car business, and use their old car models and say, "Oh, the PE ratio has to be 5 or 3 or something like this." But if you really look at it, AI companies, they have like 80 PE ratios of 80 or 75. Maybe you can explain, not those financial savvy people, what is this PE ratio and how does it play? Why is it important now that people talk about the PE ratio?
Sure.
And, let me explain it.
Let me explain it in a very simple way. If somebody buys today a bakery, right? Because in my day job I do the real businesses. Not that Tesla is not a real business, but I mean not on the stock exchange traded business. So when I help my clients purchase a small company, usually you look at a multiplier of 2 or 3 years of profits for the price that you would purchase that small business for, right? In Europe, the multiplier is a bit higher than in America. In America, it's between 2 and 3. For some very good businesses, a little bit more. So what do? You look at the last 3 years of the tax return. You look at their profitability. You find an average, and you multiply it, let's say, by 3, and that should be your purchasing price. I'm doing it quite simplistic, but just to do that. Why is that? Because you as a business owner, as a future business owner purchasing a business, you want to get your money back in year 4, right? You want to finance whatever exactly you have to at one moment have reimbursed yourself for the initial money you have put yourself. So at the stock exchange, these multipliers are higher. Why are they higher? Well, first of all, because there's the liquidity of the stock market. And then obviously these are bigger companies, and some of them are in their growth phase. So when you're in your growth phase, you can't just look at the last 3 years and take the average, because they're flying away.
So exponential,
Exactly. So what do analysts do? Instead of looking at the last 3 years, they look at the next couple of years, current year, +1, +2, +3, whatever. And obviously not everybody's looking at the same years, and not everybody has the crystal ball to understand what will happen next year or the year after, right? So you have a lot of moving parts in there. And then there's obviously the multiplier. So you have the traditional car companies that have this multiplier of 5 or 7. That means we're projecting the value of this company is 5 or 7 years. It's projected profits, right? Again, projection can be very wobbly, and it's not always a science. It looks much more in the known than what it is. There are quite a lot of factors in there that are just projections. So, and Tesla is around 37 at the moment, right? 37 multiplier of next year's earnings. And so you have on the other side the Nvidias of this world that are up there in the 60s, 70s, 80s, as you said. So why is that? It's because there is the assumption that AI will bring so much more need and so much more profitability for these players that the multiplier. So that's actually a double effect. First, the profit projected for next year or 2 years or 3 years out is higher because you just expect so much more. But then on top of it, you give them the benefit of a higher multiplier. So actually playing it up double and triple. So Tesla is today on the stock exchange. If you look at all these tables, how they always show the different stocks in the consumer discretionary segment. So these are the Walmarts, the Costcos, the Fords, the GMs of this world, right? These are consumer depending stock, meaning the consumer needs to have the money to spend. So all the indicators that analysts or stock pickers or fund managers in this field are monitoring are consumer spending.
Physical products, like one car goes from the line, the next car goes from the line. So this is important. The real numbers, very classic.
Bottom up. Exactly.
Yeah.
Exactly.
Not Google, not Amazon. It's
It's you can touch the product, you can check how many people go into the Home Depot every morning to get their building material, you can look at the lines at Costco or whatever. So it's really consumer oriented. Now, I'm not saying Tesla is not a consumer oriented product. Of course it is. But there is so much more to it, right? There is the energy sourcing, there's the vertical integration of so many other products, and there is, of course, AI. Now, I had this discussion yesterday with a couple of really smart people saying the problem is people are just about getting their head around ChatGPT and all these language models, right? They just start to understand that by sufficiently smart coding and programming, the language model can replicate a conversation as two humans have. So we're now getting to the point where language starts to be mastered by the machine, right? And it is tangible. Tangible is probably the worst word for it, but people can understand or get used to the fact that this machine suddenly responds to you like a colleague or a partner or a child or whatever. Suddenly there is a conversation going on, right? It's not just I'm putting a search word into Google and it finds me that search word on 2,000 other websites, and then I have to fiddle around which one is actually the one I wanted. No, there's already something going on, and this something gets better and better. So language models, and I'm sorry this gets lengthy again. You have to stop me if I keep on talking.
That's good. We want to go there. That's
okay. So language models are, and honestly, I don't find a better word, are tangible to the sense that anybody now just puts ChatGPT 3, 3.5, or 3.5 or 4 in their browser and experiences it. There's no danger to it. You don't like it. My husband's always telling me it's not precise enough. It's not this, it's not that. But he's obviously an engineer, so yes, for me it's perfect. For me, a layman person, it's all good. I mean, I wouldn't do financial analysis based on ChatGPT because that's my rabbit hole, and I don't think it's doing it good enough. But on the general responses I need for my day job, whatever, I think it's actually really efficient and good, a very polite way of expressing itself. So all good. So people get used to this language model use, which obviously at least directly cannot do any harm, right? You suddenly have somebody scripting you something better and quicker than you would do it yourself. We may find,
or
and I think
outline,
that's
and you can,
or
you have
and you can then elaborate. It just helps you get started, and then it improves quite well, and then you just have to finish it off. So it's a real help. But it doesn't do any harm, or at least it doesn't do any harm as long as we think it doesn't have a bias. If it has a bias, that's a completely other subject. So the approach of using it and the fear of using it, there's actually not a big barrier of entry, right? You just do it. It doesn't cost a lot. And we've been now trained for 20 years with Google, just throwing thing at the machine and something comes back, and now something comes back in a much better manner. So why would you bother? Now, so people associated in the last 6-12 months AI with that. For them, that is AI, right? And this is now, there's suddenly a conversation going on. And we have more senses than just reading and interacting by writing. We have vision, but vision is so much, I mean, obviously can hear as well, but hearing I think is easy to solve, right? Because anything that's written can also be spelled out and spoken. But the vision part, I have the feeling nobody else than Tesla is attacking in the right way, and is so much more valuable, but also so much more fragile. Because once you get vision, in fact, first of all, it's much more intrusive, right? A robot in your home could see, record, use any and everything, right? So that you get to a state where you want to ask yourself, is vision really what you want to have and give, right? Give away your privacy. But the other thing is, vision obviously then locates you in space and time, right? You're, and I'm sorry if I'm going off the deep end now, but you're getting to something where the data is not just me typing a question in, but somebody seeing and reacting, right? It's a complete, somehow it's independent of me. The car is independent from it. Yes, I'm monitoring the car when it's doing something, but 99% of the time, I don't even need to monitor it anymore. So by this vision model, we're in a completely other sphere. Yet The stock exchange, many financial analysts, I had with Gary on Monday a huge talk about it, they just don't give it that credit. It doesn't work yet. Elon has said for years it's going to come, it's not coming yet, whatever. But I think the point is that vision is a completely other animal and deserves much more to be called AI, because it's a much more complex and complete part of our life than just the keyboard, a question and a response. See what I mean? And it also is actually much more valuable. I don't know whether valuable is the right word, because it actually has a much higher impact on our life, saving life, or if it doesn't work, not saving lives, right? So the impact of words, what the heck, right? Turn off the computer. But if you suddenly have the bot with vision here who could save your life, have the car who can drive you to the hospital, have all these different, or can prevent you from an accident that would have happened if you wouldn't have.
Or you
the
have
vision.
a medical stuff, heart attack, and the car just drives you to the side, calls 911, for example.
Exactly.
Like
So all these things are so much more crucial, and the solution seems so close that it is not understandable for me that we're still in the consumer discretionary cluster. And so why is that important? Why do I make so much fuss about this? Not enough yet, because I'm not heard yet, but you know me, how when I'm determined.
It always works out when you're very determined.
I'm getting there. So why am I so motivated by that? We're in the wrong cluster. What does that trigger? We're in the cluster of this consumer discretionary. I mean, yes, there is a part of Tesla that's consumer discretionary, but let's face it, so is Microsoft. So are many of the tech companies that are in the tech cluster, because they're all selling something. It needs a consumer to buy it, right? Should we move into the energy sector? Well, then we would suddenly be in a cluster where the Chevrons and the Exxons and those of this world. I'm not sure I want to be there. Where we need to go is to the tech sector. What does that trigger? There are so many more ETFs and funds concentrating on that sector that are currently not purchasing Tesla, because Tesla is not in that cluster, is not in that basket. We're in a basket where I think Tesla is 1% of that basket. So when somebody does a consumer discretionary ETF, well, he buys a little bit of Tesla because it has to be in there. But when somebody does a tech ETF, which out of thousands out there, they're not buying Tesla because it's not in the right basket, right?
Yes.
So
also the big funds, for example, or those for example, the retirements, like huge, bulky, slow-moving, giant money givers.
Exactly.
Yeah. Okay,
they're there. So it's really important to get that message out. We're not in the right cluster anymore. It may have been okay while we're still only producing cars, but there's so much more coming forward. And so that was part of my motivation. Make them understand and make them hear that, yes, Tesla is already, on the high end of the car margin sector, because only the Ferraris and Mercedes of this world are in the 20+ margin sector. But that's not it. What is really coming is so much bigger and should not belong to consumer discretionary.
Yeah, this makes a lot of sense. So that also turns back to the question, like this profit to earnings rating, or that is going on, or this issue that people have is also because Tesla is just rated in the wrong wrong cluster. So analysts look at it as a car company, but don't get that it's actually a huge technology company and that they are solving real life AI or real life vision AI, which is on its own a technology that is, I don't know how valuable. I can't even put a sticker price on this. I also had Scott Walter on this. He's also an aerospace engineer and mechanical engineer, and he talked also about Tesla bots together with Dr. Know-it-all last week on Sunday, and it was pretty interesting to talk to them, because that's the thing. If we solve FSD, then it's pretty easy. Besides that, to also solve vision for the robot.
Sure.
That. And now the acquisition with Twitter, what people don't really realize, if you witness Elon Musk, if you really observe him for over some years, I'm watching very closely since 2 rockets were landing simultaneously. That's when it, like for me, it was like, okay, this is next level stuff here. Here's something going on. This is like we don't
There's
have
something
such a
else,
brilliant
right?
mind. That's
Yeah.
very just once in a lifetime we have somebody like this. Gonna watch him closely, and then he always combines everything. He doesn't do he doesn't do anything without a purpose. He plans ahead over 10 years in the future and stuff like this.
Steps and steps, yes.
Yeah. And on the way, of course, he has his controversies, he has his hiccups. I mean, he also is like a brilliant mind who also has flaws, of course. He's human and also has his quirks because he's very special also. He also said he's on the spectrum and stuff like this. So there is something going on that sometimes communication isn't maybe he really gets himself into trouble, but still, no, I don't want to discredit this. I actually just wanted to elaborate a little bit that, let him be human a little bit. That's what I wanted to say. And,
no, you're right.
No, yeah, but the acquisition of Twitter is about X. He's going to combine everything together one day, and then suddenly, that's what he wanted to do 20 years ago. That's why he did all of this.
I have actually a theory on that one. I have a theory on that one that's probably crazy, and there'll be people out there that...
all right, tinfoil hat territory.
Watch your comments when you publish this. So I actually believe, first of all, I think he purchased Twitter because he saw the urgent need to level the political game in the United States. I think there was a real urgency to why it had to happen 2022 ahead of the 2024 elections, and that's him being a former clear Democrat. I think he's more of a centrist libertarian today, but there was something very uncomfortable about it. And I think also as an immigrant, I'm as well as an immigrant entrepreneur. Obviously at a completely other level, but you do cherish what you find here in the United States, the business friendliness and, how you can still make things happen here much more than in Europe or somewhere else in the world. I'm sorry to say. So
I'm on the wrong side, yeah.
Exactly. Well, there are other advantages to Europe, but there was certainly an urgency to the timing. There was certainly a clumsiness on the execution. Us Tesla shareholders, I said it on that question, we're in there because it's hard, because we know it's hard, right? We've had our clicks and clacks, but I think the bigger idea and why he had been thinking about Twitter for such a long time, and why, remember at the shareholder meeting last year, he said the Twitter purchase accelerated what he wanted to do with X anyway by 3 to 5 years. So what does that mean? So, again, there's this political aspect to it, but that's not what I want to talk about. It was this acceleration of something he was planning with X for 3 to 5 years outwards anyway, and he was just pulling it in, paying much too much for it, but there was still a good reason to do it. So what's this good reason? And I think the good reason is the language model input, because the
data set. Where to learn.
Exactly, and the real conversational skills of humans that will be used not in a too academic way, because as I said earlier, ChatGPT gives you back something polished, right? If I want to write an email, English is my third language, so sometimes it's not so polished. I throw it in there, 2 seconds later it's polished, copy it back into my email Outlook, and off it goes. So there is something nice about this polishedness. But it's not natural. It's not what happens between two humans, right? We talk with ams and rights and this and that, and there's something to it. At the same time, Twitter had the big advantage compared to any other social media to be very precise. For a long time, we were stuck with 140 characters. Then it went to 280. If you don't pay blue check marks, you're still on that level. So
this limitation made the people had to perfect their sentence and shorten everything, make it more precise and simple, and get it out there. Yeah,
there you are. So I think that quantity of data out there, the quality of data out there, the human interactions out there, the fact, I don't know whether you witnessed, Twitter now in the For You tab is really getting actually better than the Following tab. I'm hardly moving away nowadays from the For You. Well, 6 weeks ago it was still crap, and I wasn't going there. So the speed of getting better is incredible. Then put into it that the X app is going to be an app where you can do financial transactions, where you can purchase items, where you can group among people who think alike or who want to have a deeper discussion. So it will become the WeChat of the Western world, with the advantages of what we have here to our capacity. So all this is the ideal tool to train the language side once you have solved all the vision side, right? So, and do remember when he said, hang in there, in the end, this Twitter purchase will be good for Tesla, right? I mean, I don't remember exactly how he said it, but it was clear that there was a long-term benefit for Tesla investors in this Twitter purchase, and he'll make sure of that. And then people were like, oh, maybe we can have preferential stock and all that. No, this is much bigger. This is going to be the source. The day he switches on that, the Twitter communication skills, and it's not about proprietary data. It's not about my tweet, now suddenly not belonging to me anymore.
Training the neural net, yeah.
Exactly. This is about training and having the systems in place that this training can just plug in. And then the part of the language tool that is currently, complementing the vision tool is just going to be available. And nobody has this. You are not communicating with Google. You're not. Even I don't have an Apple phone. I only have an Android phone. But even with my phone, I don't communicate how I communicate with Twitter, right? I mean, it's just a completely other way of exchange of information and communication skills and interaction that I don't think any other tool has, and it's his.
Yeah. And what is really interesting, he's so focused on the truth, like he always says, like it's very important for him to and so I think this is important. He wants to train a real open AI or an AI that is truthful, because when it is truthful, you can have meaningful discussions, and that's why also the community notes are very interesting and stuff like this. So I think the AI is backed by some facts also, or the community maybe this gets bigger even, the community notes.
I do think so.
So because then the algorithm maybe takes the approach of the community notes to check for informations if they are true or not, or probable or not probable, something like this. So you can have really a deep discussion maybe with your Tesla bot, or for example, you drive and you're like just talking to your car. Oh, I'm pretty hungry today. And then, here around, there's a McDonald's there, and he already knows what you mean and remembers discussions you had with the AI. So something like this is really interesting. And because for the car, at least you can have your inputs. Of course, you need voice commands. So this is also because you can't type it, like you have to be a little bit concentrating. But still, when you sit in your car and it's autonomous driving because vision is solved, maybe you can type something on your phone or in the screen. Okay, that's not a big deal. But if you want to interact with the humanoid robot, you don't want to give him like what you want to type on the back something or send him an email. No, you talk to him, of course. So this is so interesting. Combining vision with the language model, and then and
let me get back to community notes. Are you a contributor to community notes or not?
Right now, not. No.
So let me tell you, I am, and I'm on the second level now. Let me explain how this happens, and I'm amazed by this. I'm really amazed watching it, and I try to find every day a little bit of time to help. So initially, you're for a couple of weeks only there to rate notes that somebody else has put up. Okay, so let's say Jeremy says something crazy. Somebody put in the community notes, this is crazy, it should have been this and that. And then in the initial phase, you note whether that is helpful, and you have a couple of tick boxes to say whether, how it was helpful, or if you find it not helpful, why you didn't find it not helpful. And it's all automized. It's only tick boxes. You don't really put more input into it. But so before this community note would ever be published, you have to have a certain number of people rating it helpful or not helpful, and it traces where these people come from. So if I would have a group of 10 people and we would say, okay, we're going to always now rate these things together, I give you a sign that I rated it and then you do it and whatever, that wouldn't work. It makes sure that not the same cluster of people comes back and always rates the same stuff. You have to be in company of 9 strangers that are among themselves strangers as well to make the community note finally capable of being publicized, right? So you can't trick the system, which I think is very clever of him. Also, the people contributing have to have contradictory views on other subjects. So let's go into the political thing. Let's say I would be Republican. I'm not, but just let's say, and I would community rate, not know yet, community rate something, and the other 10 doing it at the same time would all be Republicans. That wouldn't help. They're going to wait that either some Democrats or whatever also chip in and come up with the end that this is helpful before they publish it. So there are actually thousands and millions of community notes that never see the daylight just because not enough people contributed in rating it. So that's the first level, which I think is very clever. The second is you write. So you have to have had a certain number of your ratings help publish notes to get to the level of now being able to write yourself notes. But then that's the same thing. Now you have a little button, 3 dots on the top of each tweet, where you can say, I want to write one. You write one, and then enough people have to now jump in and find it helpful from different horizons, and only then does it get published. So myself, I don't know, I probably wrote 20 and only 2 or 3 ever saw the daylight just because not enough people jumped in. Now I had one on Dan O'Dowd, our clown from Santa Barbara.
Our friend, yeah.
Exactly. And so I wrote really, I felt really strong about it. And I wrote another one about Leo Cohen because I felt strong about his option trading and that people should know that he has positions. Both never saw the daylight, because obviously lots of people loved them and lots of people rated them helpful, but they were all my same pro-Tesla people, and there were not enough people from the other side rating it. So I think what he put in place here is actually getting as close to truth as you can, right? Because there are obviously multiple truths out there, but if we can agree with our strongest opponents or with people that are really on the other side of political views or whatever world views, that this note is helpful, only then will it become public.
Yeah, and I think it's interesting because this model of how you rate this this community note is based actually more or less on the in the way how the justice system works. That you get a letter that you are in the stand, or I don't know how it's called in English, the way where the people from the public say if like or choose the jury. The jury, exactly, of course. The jury. So it's like a jury. Like it's randomly pick people from different locations, different communities, and placed there randomly. So people don't
but even
take
better,
advantage of this.
But even better, because obviously what he does is Twitter clusters you. I'm sure on my cluster, I'm the pro-Tesla, pro-finance, pro-this, against this and this and this and this, right? And so you already, and we obviously don't know what we're clustered for, but when you then get into the community notes administration, either as a rater or as a writer, your cluster determines that somebody with a completely opposing cluster has to find this helpful for your note to be there. When you have a jury, you obviously, when they select jurors here in the United States, they know little about them. They see, the person, the age, the neighborhood, and 2 or 3 questions.
Sure.
While where we are in the community notes, it's actually better clustered. The cluster seems to be my word today. It's better prepared to make sure that others with a opposing or very different cluster have their say too. And this should exist on all social media. I think this would bring the tone down to so much aggressivity and to so much bad behavior. And I think he's really leading on that one. And community notes will also improve because, again, if Twitter is the source of the language model and community notes makes it sure that people try to be objectives when they write their tweets and make sure, that there's somebody strongly vetted, but putting an opposing opinion out there, that's really going to help us. This is going to be a much better source of information and language as a basis for the language model than anything else.
Especially because also very it's a debating platform almost sometimes, and it also because I think it's not like a picture sharing platform, for example. It's a different kind of platform. People share pictures, of course, and people talk about something in that direction. Of course, people are very strongly in those bubbles. They this is very evident in Twitter, very strong areas you have because the people you follow, they confirm your biases, of course, and say still everything. But it's interesting because people love to debate there. People love to share opinions, especially opinions, and not just I like this color. Also, they do that, but most of the time it's more about discussion. So this is also interesting because you have to. I hope you don't have to argue with your robot all the time. Or wait a second, no, actually it's this way. So you have to fight with your robot. No, but with the Tesla bot. But I think this is very interesting to see, and really something you have to be out looking for the developments there, because it's so in the early steps that people, of course, don't model it in any price model, but still this is something you have to keep an eye on. And we have real life vision AI, we have the language model, we have Dojo, which is one of the biggest supercomputers of the world when it's really there.
Up and running.
Yeah. So interesting times actually to really see that. And it's very interesting. And that's why I think Tesla's very undervalued right now still.
It is. And when
in my opinion,
when you see financial models, you have actually a couple of extremes. You have ARK, who sees the robotaxi and goes 100% into robotaxis, right? That's where their predictions for the next 3-4 years are very high. But very limited on energy and nothing on the bot, zero on the bot, which is incredible, because if you see robotaxis, how can you not see the bot, right? Yeah. Now, then you have the Garys of this world, which is really the large majority of financial analysts, which is okay, FSD is not there yet. When it's here, I'll start slowly putting it in. Okay, I put the $15,000 in because that's money I can count on, but I don't put more. And there's a lot of confusion, by the way, because as you know, FSD is really sellable and usable only in the United States. So when Gary and his friends go up, but it's only 8% of people that purchase FSD. Well, it's 8% of all Teslas worldwide. But given that FSD is no good in Europe and in China, you should actually compare it to the, 1.5 million maybe cars, on 1.2, 1.3 million Teslas that are in the United States. And if you there see that it is 400 beta testers of FSD in the United States, we're much closer to 25-30% than to the 8%, right? So I'm still debating with these people a lot, because I think we're not comparing oranges to oranges, but oranges to apple at the moment.
Can I add something here? Because I have something. A friend of mine just recently went to Tesla to test the Model Y, and the salesperson really even encouraged him not to purchase FSD.
Oh, wow.
Because he said it's not usable here, actually. So really,
that's in Europe,
some
right?
of the features. Yeah, in Europe, in Germany, it was in South Germany, and a huge dealer here or Tesla center. He really didn't not encourage him, but he was like, I would wait with that because you have enough features already in the regular.
Which is honest.
Europe,
because obviously, I mean, even in the United States, because there seems to be first, I think that in a couple of months, and I hope it's short months, we will all have software here in the United States that allows us to download the current best FSD version, which I think is now 11.2.4 or something like that, but whatever it is. Because the thing is that on certain X's and certain S's, on certain 3's and certain Y's, there are software versions that are not compatible with, if you would now jump in line for FSD beta, just because there seems to be more than one version around. I'm very confused. So I had it last year for a month, more than a year ago. It drove me crazy because I'm just a control freak and I'm an old lady, and this was not for me yet. And everybody said to me, stop it straight away. You're gonna freak out. Doesn't matter. So I gave it back after a month. And I'm always in contact with Omar, Holmar's blog, who is it ready? Is it not ready? And he told me the other day, just wait a little bit more, because what they're going to do, and Elon confirmed that by Twitter, a tweet, is once they have all the softwares of all cars at the level where they can download the most recent FSD beta version, which is soon to come, everybody will get 1 month free to test. And I think that's the moment where people will then either purchase it or subscribe. And that may be the moment where you can't buy it anymore for 15,000, which is now it's monthly, and that's or daily or whatever it is, which makes a lot of sense. So I'm waiting for that for both my X and my 3, but I'm very, very impatient to have it back.
Yeah, I can imagine that. So maybe for the end of the episode, because I know you're a little bit time constrained today, and I'm very sad because this discussion is so interesting, and I wanted to talk more about of the shareholder meeting. But this was important, I think, because it's when we talk about Tesla, we have to talk about their software products that we were talking about their AI technology, which is a huge driver for the stock. So I think it's still in the ballpark of course, of the financials of Tesla.
Sure.
So maybe we look at at your tweet you recently put out about the voting of the directors, and maybe you can comment just what we are seeing here for the audience.
Sure, with pleasure. So when there's a shareholder meeting with elections, when there was proxy agenda and people have to vote, in the 4 or 5 days after that, the company has to give details of the results to the SEC. So this is usually done in form of an 8K filing, number 8 and letter K. And Tesla's came out on Monday. I wasn't at home Monday, so I couldn't do that. So I did that on Tuesday evening. And I compared how this year's director elections results compared to previous years. So this year got elected Robin Denholm. She's back the chair since 2019 of Tesla's board of directors. She had joined Tesla as a board member in 2014. We had GB Straubel coming back now as board member. He was obviously before that one of the co-founders.
Yeah, finally, and I was cheering very much.
And exactly, and Elon Musk's re-election as a board member. And then, so you see the results in the bottom line for the 2020 results. So these are the votes that were expressed against this director's election. When you vote for a director, you either can approve him, you can be absenteeism, or you can be against. So I only concentrated on the against votes. So Robin had 19% of the people, blue line here, voting against her election in 2020. Then in 2021, Kimball Musk and James Murdoch were up for re-election because it's always a 3-year cycle. And 20% were against Kimball, 30% were against James. The worst year for directors opposition was 2021, when Ira Ehrenpreis and Kathleen Wilson-Thompson had to be re-elected or reinstated. 32% against Kathleen, 36% against Ira. And so everybody on Twitter was, not everybody, but the most vocal opponents of Elon and the board were going on and on that this year would be, lots of people voting against, that they had institutional support and whatever. And the result in yellow is exactly the opposite. Elon only had 5% opposing, which actually, who in the world has Tesla shares and is against Elon Musk? But there you go. 14% against GB Straubel, which is the second lowest number of these 4-year panels, and Robin at 25%, which I think is a great result for her because, given the heat the board took, she was the only one really of the old board now being up for re-election. I think 25% is absolutely fabulous, and I congratulated her for that. So I'm very, very pleased with this year's result. I think this is also the result of Tesla reaching out to institutional shareholders. Robin did a video on that a couple of days prior to the shareholder meeting where she explained how these institutional investors were coming to them, to the board members, asking questions, got responses and whatever, and obviously did get the comfort that they needed. The fact that Elon appointed a CEO, Linda as a Twitter CEO probably gave them comfort as well. But anyway, my clear and strong message is this is the strongest board approval for a long, long time. And all this crap talk about a board of directors that is not present or doesn't have shareholders' trust, here is the proof that that was all wrong.
Yeah, pretty nice conclusion there. Also, because the loudest voices are always the ones you argue the most with,
Sure.
and this is a great example to see that people still trust Elon Musk, which is very important for the company going forward. Because if Elon wasn't there, maybe it would be just a car company actually.
Exactly.
So. Yeah, and it's crazy how many part changes they do a day. The agility is very unprecedented in the industry. Of course, here on my channel, as you know, I focus on the German market, try to compare it, give a German angle on Tesla a little bit. And what I see is just devastating to see actually, and to say it. And I don't say it like happily. I don't want the German car brands, of course, not to succeed. But when VW says something like, "Oh, we want to produce for around 4 million EVs around 2030, this is alarming. This is actually alarming. And BMW talking about selling gas cars till 2035 when the law is in place where they can't register.
And I think they're still
they're lobbying crazy.
Exactly.
Of course. We have to give them that. They want to. I mean, it's through in the parliament, which means now they can like try to put backdoors inside of this law, but they can't like just get rid of the law anymore.
Yeah.
It's very difficult for them. So they are lobbying like crazy right now, of course, because I mean the Dieselgate scandal was just 2015. So
I know.
There you see how VW was slow with adaptation. Then they had Herbert Diess, and the problem was we all know what happened to him. Yeah, sure. He was left, so he left, but he stepped down. But he was vocal about everything, and so this atrocity. Actually, I really can't put it in other words. But now compare this to Tesla. Now, I'm thinking about like 30% market share, which sounds crazy, or 20% market share of the whole car market. Sure. I could see that. And BYD and the Chinese manufacturers are the ones who will follow, or some maybe exceed Tesla in production numbers. We don't really know, but I don't assume so with Tesla's production methods in Mexico that are coming up. So it's very interesting to see.
I mean, I find it's actually so comparable to what happened to Apple. And it's actually so much better.
It's BlackBerry, it's Nokia, it's Kodak.
So,
it's a Kodak moment.
Exactly. So you have today Apple having about 20% of the phones sold, but having more than 80% of all profits, right? And that's that. But Apple is not manufacturing. Tesla is. Apple doesn't have a secondary and third product as strong as energy and bots are going to be. And let's not even talk about all the rest. Apple is making money, really good money, because the App Store is giving them 30% of something where they don't have to do much, right? Where the creators are somewhere else and the client is having their phones in their hands. So Tesla's model is much stronger because it doesn't depend on one straw that can break. Because the App Store straw may one day not work the same way anymore. People may be fed up. Creators may find a better way of doing it. It works because at the moment Google and Apple have this entente. But wait until that breaks, because this the whole market, this whole AI thing is gonna disrupt this market. The Googles, the Amazons, the Apples of this world will have to rethink how they make money. And I think this golden river of easy money, which wasn't easy initially, I'm not saying that, but that's but Tesla's they had their easy times, but Tesla's base is much stronger because it comes from manufacturing, it comes from vertical integration, it comes from raw material sourcing, it comes from the energy sector, which is completely diverse. I mean, what does Apple have that compares to the energy sector? There is nothing. And then add the bot, and then add all the software as a services that will get of it, and add Twitter. because while we may not see it directly, it is a main part to the game.
And now add something more to that, which I find so interesting. It's about, I think the most valuable thing Tesla has produced is their company culture, actually. Because their company culture ensures that they are still flexible in the market. And I can see something like this, for example. What people who say, what happens when the market is saturated with all the EVs? What happens then? Okay,
well, then Tesla
it will take a
continues to
long
innovate.
time and a lot of money will be made on the way, but still, what was happening? Oh, we have batteries left from car production. Let's go make more batteries for energy. The energy sector is still very small in comparison, but it's a bigger it's a bigger market actually than the EV market.
It will go, and then but there again,
and
I'm
the
sorry,
bot
I'm
even
coming
more.
back. Exactly, and there I'm coming back to my circle. That's why I liked that answer from Elon so much. At the moment, cars have the potential to go to 80% margin. Energy has the potential to go to a 25% margin. If we have enough batteries, it's perfect to be in both markets. But when we can privilege cars, and that's what they're doing, and that's why all these people screaming about inventory, I'm going, oh my God, do we care whether we have a week more of inventory or not? Because what we're doing is we're flooding the market. We're flooding the market with a product that's currently around 20% margin, but that has the potential to go to 80%. Each car with the switch of somebody just pushing the subscribe button becomes a money machine. And so that's why, don't get lost in the daily noise of this all. There is a plan to it. There's a system, and the plan is so much bigger than we all grasp. I think sometimes I see something, and then there's even more to come.
So on that note, we're gonna end the episode because I cannot add anything of value to this you've just said. So very exciting times we are living in right now. Great we are living in this generation to witness everything, because it's
what a
very
time
exciting.
To be alive, right?
Yeah, exactly. So thank you very much, Alexandra, for being on this podcast. Maybe you want to tell my audience that, I mean, I assume everybody knows you and follows you, also from like the applause you've got from your Alexandra Merz, and everybody everybody knows you in the community. You're a star there.
That was so cute.
Yeah, but maybe you can tell my small audience what you're up to, or maybe something is on your mind that you want to get out there, something you want to plug.
Sure. I mean, but I mean, there are two things I do, which is obviously I'm daily on Twitter, Tesla Boomer Mama. I have a little subscription account, which is $1 a month, so it's not really expensive. But just so that everybody knows, I don't put any Tesla information for subscribers only. I have a policy that my Tesla and finance stuff is public. I want people to have that for free. What I do on my subscriber platform is really more the personal stuff. We're foodies. We're going to nice restaurants. I publish food pictures. We do lots of, once per week, we do a space where people can ask me anything. So it's much more of a personal level. So, I mean, if like somebody doesn't want that, exactly. If somebody doesn't want that, I completely understand. But I also want to let people know this is not about making money. All the proceeds from the subscriber accounts go to charities that my subscribers choose. Every month they choose where we're going to do it. So this one is going to
made a vote
and then reserve. Exactly, and then there it goes. I mean, it's a couple of $100 every month that go there, whatever. So it's not a huge thing. The other thing is on my Twitter account, I always publish when I do an article on Substack. So when I want to go a little bit further down the rabbit hole, I did one beginning of the year on a board member. So I do stuff where I help other people publish. So you can get on my Substack by going on my Twitter. And I appreciate all support. There is nothing is paid. There's no subscription necessary or whatsoever. But I really appreciate when people read that, because it gives us a platform for a little bit more of a deeper exchange.
So you've heard it. If you want to hang out with Alexandra virtually, become a subscriber, ask her some questions on her private spaces that she's hosting. And so at Tesla Boomer Mama is her Twitter handle. I'm going to link everything down below, of course. And so, that's awesome you were on, and I'm going to repeat this, of course, when you have the time. And thank you very much, Alexandra. And for the audience, there's only one last thing to say, and that's goodbye, everybody.
Goodbye.
Wasn't this episode awesome? Let's accelerate the pace of innovation by subscribing to Tesla Fix. It is my absolute favorite channel on the whole interwebs.